Good morning, everyone. Welcome to Trading Together. I'm Mel Gacee. Hippity hoppity range bound action so far this morning, and we're going to talk about the markets and all the big data we've got coming up. So we've got huge data coming tomorrow morning. We could see some front running. Sometimes we see that the day before as if somebody knows what's going to happen. We do see that. So if you are here this morning, I just want to welcome you. Say hi, drop your name in the chat, and just let's get to know each other. I am here to help you. I'm here to answer your questions and your comments, and I'm here to do some live trading. You can watch me trade. You can take trades with me, and you can kind of benefit from some of the teaching I'll do along the way. All right. So if you're here, say hi and welcome. All right, let's start. Let's jump right in. Let's look at. We are looking at. Oh, I left my tea on the stove. Forgot about that. Okay, so we're looking at basically a sideways motion happening right now, and we'll zoom out a little bit so you can see it. Let's go to the 15 minute on this. This is the futures chart, the ES. And sometimes zooming out can really give you the bigger picture. So let's see if we can kind of analyze what the bigger picture might be. And I'm going to give this a few more days just so we can see where we've come from. All right, so this is a 20-day, 15-minute chart. So what that means is every candle on this chart period of time. So when you zoom out a bit, you can sort of get this feel for what we're doing. So we've had that like this climb that's happened mid-December into the end of the year. We hit an all-time high at the end of the year. We rounded over, which is really common after hitting an all-time high. It's really common to kind of pull back a little. Then we got a bounce starting at the beginning of the year, the second, right? And then we've sort of been climbing since then. We hit a new all-time high over here on the 7th, which was just yesterday, and then again pulled back from that. Now today, we've been doing this herky-jerky up and down motion. It's been a little frustrating, but here we are. So that's kind of the bigger picture. I'm going to zoom into the minute chart in just a second so we can see kind of what's been going on just today. So here we've got this chart showing us pretty much since the middle of the night or the close yesterday, we had kind of this push sideways. It was strong downward push. And then really what we've been doing in here is just kind of ranging. We're holding the 6920 area on the S&P 500, the SPX. And here we're sort of hitting a little. What they're fighting against right now is yesterday's low of day. This blue line right here is what our low of day was from yesterday. And you can see that if you scroll to the left here, this is yesterday's chart. That's our low, came right at the close. So we came down through it overnight and stayed below it most all night long until just a few minutes ago. We pushed up through it, came down through it, pushed up through it. And right now we're just kind of, really, it's kind of a bull-bear line. So what the bears want is to get it below yesterday's low of day. What the bulls want, of course, is to recover and to continue higher. So we're going to have to watch this battle. That's really what's going on here. It's a bit of a battle, up and down, up and down. So let's see if we come back down through it here in a minute. It looks like we could. I'm going to zoom in a little bit. And you can see how strong this top is right here. There's a top right in through here. It's been building for about an hour now. So they have not been able to really beat this top in the last hour. They just kind of keep, toggling sideways up and down. So that's what's happening right now. We're coming back down to test this low of day. If we come down through it, we're looking at this kind of this bottom zone right here currently, but we've got a lower bottom over here. So we need to kind of pay attention to that. So how do we choose how to take a trade in this kind of hippity hoppity market? I personally don't love taking trades on ranging. I call them ranging markets. A lot of people would call it consolidating, sideways, ranging. They're all different names for the same thing. It means that price action is staying within a certain zone. If the zone is big enough, you can trade it. Right now, this zone is on the small side, so it's a little challenging to try and trade this. These little ups and downs, can we make money on them? Yes, but they're not quite big enough for the risk to be worth the reward, or the reward to be worth the risk. Let's put it that way. All right. So what I'm looking at here on this chart, there's a lot of lines. It's very busy. I know you guys know that about my charts. They are busy. I have a lot of indicators, but they, believe it or not, they all do mean something. So right now, what I'm looking at, what I'm always looking at, is the VWAP. So this white line right here, this heavy white line, is the VWAP. That is the volume weighted average price. And that line is not just a moving average. It's a moving average that takes volume into consideration. And so you can see we're getting a slight move upward on the VWAP. And this price action is not breaking down below it just yet. We broke down below it in the morning, came up over it, came under it, and we've stayed roughly over it since, again, about an hour ago. So now we're testing it again. If we get a strong break of the VWAP, I might consider jumping in on puts, but as of the last hour, we have not broken through it significantly. We did this little blip here. So I've got to wait and see what this action will break to one side or the other. And so we have to wait and see to what side will it break. All right, let me take a look here. The working order. I do have a trade that I'm in that I'm watching. And this VWAP is right in my way. So I'd like to see a little break of the VWAP here. We haven't really done, like I said, we haven't done much of it. We did it once this morning and once again, but really we've been respecting the VWAP. It's been bouncing off of it pretty consistently today. Let's see if we can get it to push down through it. That would be great. So we're just about 7 points under yesterday's close. So that's how these numbers are measured, by yesterday's close. So we're, like I said, down on the SPX, it's about 5 points, but on the ES, it's about 6 or 7 points away from yesterday's close. So slightly negative, but not horribly negative right now. I'm going to take a look at the volumes. So this is the option chain. This is where I trade, right? So I'm not trading the stock itself. I'm trading options. Options are derived from the stock or the underlying, and they get their value from it. But options trade a lot faster and with a lot more leverage. You can make a lot of money a lot faster than you can just trading stocks. And you can also lose money faster than you can trading stocks. So be aware of that. There's a lot of risk when you trade options. So this is where I come to place my orders. I look to see a lot of times, where's our volume sitting? So on my option chain, I have it modified to include volume and open interest. Volume is a dynamic number telling us how many people are trading this option right now. Open interest is a static number telling us, as of last night, how many people were holding this position. So open interest won't change during the day. We only get the updates once a day at night. Volume changes all day long, and it doesn't go backwards. It only increases. So as more and more people trade this option, they continue. It's like a counter, like a ticker count, right? It just keeps going up. It doesn't go backwards. So right now, the highest traded option is sitting on the call side at 690. So the 690 calls are the highest traded option at the moment, followed very closely by the 688 puts. They are separated by about 20,000 volume. That's not a huge difference. So you can see we're fairly evenly balanced on both sides of the aisle, right? We've got the puts on this side. Remember, puts are for when we want the market to come down. Calls are for when we want the market to come up. So if we think the market is moving up, we're going to buy a call. If we think the market's coming down, we're going to buy a put. So on the put side, we are pretty evenly balanced with the call side. So we can see, and that's exactly what's happened all day. Puts and calls are balanced. We're just up, down, up, down, up, down. So we're not getting strong direction. We are testing the VWAP right now. So this is a 1, 2, 3, 4, 5. This is our 6th test of the VWAP this morning. And it has held every time. Think of the VWAP as it can represent a resistance or a support, but it does also represent a magnet. Price is usually drawn back to the VWAP, right? So it's a bit of a magnet for the price. When we retest a level over and over, think of it as someone trying to kick a door in, right? You kick it, it doesn't go down. You kick it, it doesn't go down. You kick it, it doesn't go down. Usually, the more we test a level, the weaker the level becomes. So not always. Sometimes it's going to hold. Right now, it's holding. But eventually, a lot of times, not every time, we will see that level break. So I'm watching to see if we can get this VWAP to break. So far, we have not been able to. And it's really tricky to take trades in this environment because we need enough room for this to go in our direction. And when it's kind of hippity hoppity like this, it's hard to get enough room for it to go in our direction. So that's the challenge. All right, there's a little drop. That's nice. Let's see if we can keep going. My limit order is right here. That's where I need price to get to reach my profit potential. Let's see if we can do that. So several things that I look at during the day as I'm trading, several tools I'm using. We already talked about the VWAP. There we go. There's a nice little drop. We talked about the VWAP. I look at the VWAP as kind of the center divider in a highway, right? We've got puts or calls going this way, puts going this way, and the VWAP sort of the center divider. If we're under the VWAP, I'm more inclined to want to take puts. If we're over the VWAP, I'm more inclined to want to take calls. But on days like today, where we're just hovering over and under the VWAP, we've got to wait for clear direction. So right now, I'm waiting for clear direction. But in general, it's my mile marker, it's my highway, it's my center divider. So the VWAP tells me when we're moving up and when we're moving down, unless we're doing like we're doing today, which is sideways. We're moving sideways. So that's one really important indicator for me. I use it every day in my trading. The other indicator that I'm using in my trading is the MACD. This is an indicator that has been around forever. It's just been probably decades that it's been in existence. So the MACD stands for Moving Average Convergence Divergence. So it's taking a couple of moving averages and it's looking at the distances between these lines. So down here, this is the MACD. It's going to look at the distance between these lines to determine what's the strength of our move. So what's cool about the MACD is that it gives us it measures two different things. It measures the momentum of the move and the direction of the move. So that's helpful. So when the MACD is green, it's telling us the move is upward. And when the MACD is red, it's telling us the move is downward. But the length of these bars is telling you what is the momentum. So when we've got the bright green here, it's telling us strong momentum to the upside. And then when it starts going darker green, it's telling us that momentum is cooling off. And then when it goes red, it's saying, nah, we're getting bearish. And then as these brighten up to the downside, it's telling us more momentum on the down move. And then as these bars get shorter and darker, it's telling us, no, we're losing momentum. So it's not a perfect indicator. It has its falses, but by and large, it's a really good indicator. You can look here and see overall, if we let's zoom out just a little bit here. Overall, you can see how pretty accurate it is, right? We've got the down move that starts here. It does come down. We've got the up move that starts here. It does move up. Down move here, up move here, down move here, up move here. So you can see how pretty accurate it is. But it's not always. No indicator is perfect, but it's a good one. So I use the MACD, I use the VWAP. I'm also looking at the VIX. So the VIX, remember, we've talked about that a couple of times. The VIX is the volatility index. It measures the options on the S&P 500 out a month. And it's trying to determine what is the fear level of the market. It's also known as the fear gauge. That's its nickname, but it's the volatility index. It's measuring volatility, and it goes out and it looks in the future at these options on the S&P 500, and it says, it can tell us, is the market fearful or is the market complacent? If the market is fearful, we will see the VIX going up. If the market is complacent or happy, we'll see the VIX going down. As the VIX goes up, fear goes up, market goes down. As the VIX goes down, people are happy, market goes up. So it has an inverse relationship. Think of it this way. It's an inverse relationship. VIX up, market down. So that's something I look at also look at it on the daily. I also look at it on the minute by minute. So I'm watching it here in my lower window, minute by minute. Right now, we're getting this little rollover on the VIX coming down, corresponding with this little push here on the market moving up. So very, very typical behavior. We would expect to see that. We are still in this range. And the top is pretty clear here at 690 SPY. The bottom is sitting right here at about 688. And what did we say? Where were our volumes on our options? That's where they were. 690 on the call, 688 on the put. So that's our range right now. We got to wait for that to break. So no trade until this range breaks. All right. So things I look at to gauge the market overall market direction, sentiment besides the VIX is I'm looking at the Magnificent Seven, right? So The S&P 500, as you know, is an index. It houses the largest 500 stocks. 7 or 8, we would say, of those stocks are called the Mag 7 or the Mag 8, the Magnificent 7, Magnificent 8. Those 8 stocks are made up of Apple, Amazon, Microsoft, Meta, Nvidia, Google, Tesla, and Broadcom is kind of the 8th one. If we looked at a heat map, I'm going to show you a heat map. This is a visual representation of how the S&P 500 is broken up. Right here, this is a visual of the S&P 500. Every single one of these little boxes represents a stock inside of the S&P 500. The size of the box represents what is the proportion of value that it holds in the S&P 500. So this is the index, the S&P 500. This right here, you can see, is the index. This tells us what each stock is basically worth. This is this is called the heat map, right? And I have this on Thinkorswim. If you have Thinkorswim, you have access to it as well. When you look at this heat map at a glance, it's showing you what is the S&P 500 doing. And it sort of segregates them into the sectors, right? So there's different sectors. We've got consumer discretionary, we've got healthcare, energy, consumer staples, but by and large, the big dogs are in information technology. And look at the size of these boxes. Nvidia, Google, 2 Googles, right? Class A, Class C, Class A. This is Alphabet. Amazon's a big one. Meta's a big one. Microsoft, Apple. But you can see Broadcom right here, that how big these guys are. And then you see all these teeny little guys. Look at the utility sector. Teeny little guys over there. These guys have a great day. Okay, that's nice, but big deal. It does not move the S&P 500. These little guys down here, they could have a 10%, 15% run. That's not going to matter. That's not going to lift the S&P 500. What's going to do it? These guys. These guys move it. So I look at the Mag 7 in a lot of different ways. This is one of them, but this is just to give you guys a visual representation. So that's one way you can look at it. Another way that you can look at it is through what we would call an ETF. An ETF is an exchange traded fund. And we've talked about this before. The SPY is an ETF over the S&P 500. So you can't own the index. You can trade options on it, but you can't own the index. You can own the SPY. So they created this ETF, exchange traded fund, and they put everything inside the SPY exactly the way it sits inside the S&P 500. And then they broke it up into stocks and they said, okay, now you can own the S&P 500. So that's what the SPY is. That's what an ETF is. So there are ETFs over everything. There's ETFs over Tesla, ETFs over all of the indices have an ETF. Everybody has an ETF. Bitcoin has an ETF. Everybody does. So the Mag 7 also has an ETF, and it's called MAGS, M-A-G-S, right there. I keep that on my watch list, and that just keeps tabs on all 7 of them, of the big mega tech stocks, and it kind of gives me at a glance how they're all doing. As you saw on the heat map, you could see some were green and some were red. Usually they're all kind of moving together, but sometimes they're diverging. So we have some green Magnificent 7 stocks today and some red ones. So the MAGS as an ETF gives me an idea of overview of what they're doing as a whole. So right now, MAGS are down 0.29%. We are down on the SPY just at our flat line, 0.02%. So we're kind of toggling green and red today. But the MAGs are down about 0.3%. That's not huge, but it's still on the negative side. So even though we've got Google green, Amazon green, Tesla green, we also have Microsoft red, we've got Meta red, we've got Broadcom red, Nvidia red. So that's why we've got a little bit of a imbalance, right, in the tech stocks. Overall, they're down about 0.3%. So that's what we're watching. So that's another way that I gauge what is the sentiment in the market. And that is what are the Mag 7s doing? What are the big guys doing? Today, they're down as a whole just a little bit. So we would expect to see the market sort of follow. The other thing I gauge is the NASDAQ. So while the S&P 500 has 7 or 8 big stocks controlling it, the NASDAQ is all tech. So as this Mag 7 group goes, so goes the S&P 500, so goes the NASDAQ. And usually the NASDAQ leads us. Usually we're following behind the NASDAQ. So I look to NASDAQ for leadership. Some days we lead, but usually I look to NASDAQ for leadership. Today, the NASDAQ is down 0.7%. So down a little bit more than the MAGs and down a lot more than we are. So this tells me we could possibly move farther to the downside today. That is possible. We also have the VIX rising. Remember, we talked about the VIX. When it goes up, market comes down. So over the last several days, the VIX has been very slowly rising. So these things all put together are telling me it's possible to see a down day. Unfortunately, we can't trade this mess right here. Do you see this? Let me zoom out a little bit and show you again how sideways this truly is. Such a sideways mess here. Very hard to trade, very small range. So we can't trade that right now. No trade at the moment. Again, we tested that VWAP. We bounced. We're testing it again. It's just consistently been up and down off the VWAP. So right now there's no trade until we either break this top or break this bottom. So that's what I'm waiting on. And sometimes you can wait a good long time for that range to break. So that's what we're waiting on today for a trade. But in the meantime, we're going to try to get an idea of where is the market going. We are, like I said, we just recently made an all-time high, and I'll show you on the daily chart what that looks like. We are bullish in the big macro time frame. We are bullish, but we've got some big data coming tomorrow, really big data. Okay, we've got the unemployment rate coming. We have the labor report coming, so the non-farm payroll. We also have the Michigan inflation and consumer expectations. So big data coming tomorrow. If the labor looks as bad as I think it could, we could see the market react negatively to that. Now, ever since the Feds have declared free money again, so we've been in quantitative tightening for a couple of years now since the end of COVID. And we've been just recently switched over to quantitative easing. And really the simple way to say that is the Fed pumping money into the system or out of it? Quantitative tightening, the Fed is sucking money out of the system. Quantitative easing, the Fed is pumping money into the system. Think of it as free money, money press, right? Printing press. They're pushing money into the system. When they do that, stocks respond favorably. But guess what? Do the little guys get the benefit of this money getting pushed into the system? No, we don't. We pay the price because somebody has to pay the price. You can't just print free money. You just can't do it. This is where inflation comes from. And who suffers from inflation? The little guy, right? These big whales, it's not hurting them to pay $12 for a dozen eggs. They don't care. What do they care? So when the free money goes into the system, the big guys get the benefit of that and they push it right back into the stock market because that's where it's at. My friends, in my opinion, the stock market is the last great frontier for wealth building. So these big guys, they get the benefit of this free money. They're getting lower interest rates. They're getting access to free money. They're pushing this money back into the stock market because that's where they're getting the returns. Great, beautiful. Stock market goes up. And it creates these famous bubbles that we've seen. Are we in a bubble right now? I think we are. I think we're in an AI bubble. The stock market is overvalued, plain and simple. It's overvalued. So the little guys, we pay the bill. We pay the bill. The inflation continues to go up. People can't pay their rent. They can't pay for their food. It's getting worse. And I don't want to be a Debbie Downer, but that is somebody has to pay the bill. And it's always the middle class, always paying the bills. So that's the idea with where the market is going. With the Fed pumping money in, we can see the market continue to rise. But as the cracks begin to show, as these labor numbers get uglier and uglier, and they are getting ugly, guys, the labor numbers are getting ugly. People are struggling to get a job. They're struggling to keep their jobs. There's layoffs. So as the cracks begin to show, I think the market is going to reflect that in 2026. I think we're going to see a bear market. I think we're going to see volatility. We're also in a midterm year. So that generally is not a great year for stocks. Midterms are usually not a great year for stocks. But the Feds are fighting that with this free money. 40 to the tune of 40 billion a month is what they're pumping in. At least that was their last announcement. So this is the tension that we're in. This market artificially inflated, inflation and labor issues continue to grow. Somewhere the rubber's going to meet the road, and there's going to be a correction. There will be a correction, and it'll probably be sometime in 2026. I don't know when. I couldn't tell you. But let's look at the daily chart, and I'll show you that we are still currently bullish. All right. Let's take a look here. And in the meantime, we're still waiting for this range to break. Johnny Tran, good morning. Good to see you. Thanks for saying hi, Johnny. If anybody else is here, drop your name in the chat. I'd love to meet you and know who you are. It's a lot more fun to trade with friends than it is to trade alone. I'll tell you that. All right, we're going to take a look at the SPX. This is the index again, remember? And we're going to look at the daily chart. So here, this is today. This is our 1 minute. Look at that ridiculous sideways chop. Just sideways. Trappy, tricky. Can't trade it right now. All right, here's our daily chart on the index, the S&P 500. Forgive my red lines. I know it's messy. Believe it or not, every one of these lines means something. These are all support and resistance lines that I have built as we have climbed and dropped. So sorry, it's messy, but they do mean something to me. Good morning, Inner Joy. Really good. Oh, Anna. Love that name, Anna. Thank you for joining. All right. So on the daily chart, certainly we're bullish, right? Take a look at this chart. We've got a rising bottom, clearly rising. We could draw a line from here to here to here to here, and it's really a very strong upward trend line. I would say that's at least a 45-degree angle, maybe more, of the line of this bottom that's going up, right? And then we've got a very slowly rising top, very slowly. So we had the first all-time high that we've seen in a while, we had over here at October 29th. All right, getting a little push on the VIX here. Did you guys see that pop? Very nice. Sorry, I need to check my trade. That's a nice little drop down through the VWAP. I'm going to broaden this up again so you can see the minute chart, and then we'll get back to the daily. I want you to see the break of the VWAP. Broke the VWAP, it looks like, with a little bit more conviction this time. Let's see if we get a stronger move down. Or if they're just going to pull it back up again. How long are they going to keep us on the hook with this range? Let's see if we can get this to move down. Beautiful. Beautiful, beautiful. Nice, nice, nice. Oh, good, good, good. Yes. Nice drop here. Down about 12 points from yesterday's close. I guess 10 on the SPX. When the price hits this line, my order will fill. I have a limit order sitting right now on this trade. Well, don't give me that green bar. One more quick little drop would make my day. And could we trade the break of the VWAP? Yes, we could. I wouldn't have traded this candle because of this, the way it's kind of been dropping and recovering. And it's just playing that same game right now. We just need a little bit more drop here. Just a little bit. 10. Okay. And they could just turn and push it right back up through like they've done every single time this morning. Look there, see, that's what they're doing. And I got to wait some more. I'm just going to have to wait. And this is why it's so frustrating to trade and chop. You just wind up waiting all darn day. All right. So back up through the VWAP. Nothing to see here. Back in range. There was a bit of a volume pump on this candle, which a lot of times will tell you they're going to reverse. Yep, sure enough. That's super cute. Okay. Well, let's go back to our daily analysis. You can't, it's tough to trade this. All right. So on the daily, like I was saying, we've got the bottom rising and we've got the top. So we had the all-time high here at October 29th. And then we made a new high right here on December 24th, right before the end of the year. Another high on December 26th. And then the most recent all-time high we just set yesterday. And that is sitting at 69.65 on the SPX. So right under our 7,000 target. And that's, I do still think we've got the ability to come up and tag 7,000 right here, this line right here. I think we've got the ability to tag that on the S&P 500. It's only 35 points above our high. Right now, it's about 80 points above us. So I do still think that trajectory is upward, but I'm keeping my ear to the ground because the VIX has a rising bottom. So remember, VIX goes up, market comes down. The VIX has a rising bottom. It's slowly inching up. So we need to be aware that the shoe could drop at any time. And again, with big data tomorrow, it's possible it could happen tomorrow. So I'm going to be keeping my eye on that. But by and large, the macro view is bullish until it's not. So we just have to keep that in mind. We're bullish until we're not, right? All right, let me get back to the minute chart. And you can see on this chart, this is a much cleaner chart, doesn't have a lot of indicators on it. You can see we came up this turquoise line right here. This is the 200 period moving average. So we came up and we just tagged it and then rejected off of it. And now we're testing it again. Now it's been moving lower. So the 200 is moving lower, which tells you in not as big as the daily chart, but in the shorter time frame, we are moving downward. That's what this 200 is telling us. Now this is a much shorter time frame. All right, there's a push up through the 200. Let's see if we can hold it. Not holding it at the moment. So we did just make a little bitty lower low right there on that last drop, little teeny bitty lower low. Not huge, right? So here's our last low at 69.10 on the SPX, and then we just hit just under that. All right, pushing up through the 200. Let's zoom out a little and see. We've still got this top sitting here at 69.25. So until we beat that, this range is intact. And that's the problem we're having. It's tough to trade this range. Here's a push. Now, if we get a nice push up here to the top of this range and we start getting some evidence of a pullback, we could trade puts from the top of this range if we get there. They seem to be making the range a little bit smaller over the last half an hour. Could we trade a pullback from here? We don't have as much room. So the risk is high. We don't have a lot of room to the downside. If let's say it reversed here and it started to come down, we just don't have enough room before we hit this bottom. Did I catch the push this morning? I did, Anna. I've taken a couple of trades so far this morning. I caught 2 calls first thing in the morning. All right, now we're getting up, trying to test this top. Let's see if we can do that. Did you trade today, Anna? All right, little slow down here. We are over the 200, so that's a positive push. But again, not enough room to the upside, not enough room to the downside to take a trade here. So if we catch this top and it reverses, we could take a put. If we catch another bottom, we could take a call if it reverses. Okay, still going. There we go. Unfortunately, I used all my trading days for the week, all profitable, growing a small account. Great job, Anna. When you say used your trading days for the week, I'm assuming you're trading in a margin account, Anna. And if you are, as you all may or may not know, there is what's called a PDT rule, the pattern day trade rule. That rule applies to margin accounts. If you're not holding 25,000 in your margin account, they only let you trade basically 3 day trades in any 5-day rolling period. It's a rolling period, right? Not a weekly period. It's a rolling period. So you can only make 3 round trips. They call them round trips, day trades in a 5-day rolling period. Otherwise, you get flagged as a pattern day trader and they don't let you take any more day trades. The way around that, if that's your issue, Anna, is to, okay, nice push, big push here. Okay. If we get a move down, we might consider puts here. Let's see if we're going to break this range. We are pushing the very top here. Let's see if we get a turnaround. And then I'll tell you about the way around the pattern day trade rule. It's basically to open a cash account. And I'll explain how that works in a minute. All right, little pullback off this top, but no reversal yet. I don't see a reversal yet. pushing higher. I'm going to check the volume real quick on these options. Still kind of evenly balanced. Heaviest options are at the call level at 690. Followed by the put level at 688. So still kind of in between the 688, 690 zone. All right, really wanting to push this top here. There we go. Getting a little drop. All right. So using a cash account to day trade, if you have less than 25,000 is really the best solution. And so in the margin account, again, you're limited to those 3 round trips every 5 days, every 5 rolling days. In a cash account, you can trade up to the value of your account every day and you can day trade it. So let's say you have $1,000 in your account. If it's a margin account, again, you can trade the day trades and they don't care if you trade more than 1,000 because you have a margin, but you can't do more than 3. In the cash account, you can only trade up to $1,000 a day because they're going to call that unsettled funds. You can only trade your settled funds. But as you trade the day, let's say you're taking, I don't know, 100, easy math. Let's say you take $100 trades. You could take 10 trades a day, 10 day trades for $100 each. But once you reach your max value of your account, which was $1,000, then they're going to say, nope, you don't have any more funds to trade. You're trading now on unsettled funds, and that's going to get you a good faith violation. So you don't want that. That is the way around the PDT rule, the pattern day trade flag rule. That's the way around it. By the way, also, Anna or anybody else, if you have hit your pattern day, if they have flagged you as a pattern day trader in your account, they're going to say you cannot day trade anymore until you bring your account up to 25,000. But what there is a little known hack, right? If you have never gotten the PDT flag before, if you've never been flagged as a pattern day trader, you can ask your brokerage to drop that flag for you. It's a once in a lifetime concession that they will make for you. Okay, this is beautiful. This is what we needed. Very nice. All right. Anna's saying, thank you for your help. Always aware. Good, good, good. Yeah, that's a great little hack for if you want to day trade and you're stuck in a margin account with that PDT problem. It's a great hack. So I recommend it for everybody who's trading a small account, because they just stack the deck against the little guy, don't they just? The little retail trader has all these rules and they're just stacking the deck against us. But it's a great little hack. So I would recommend converting to a cash account if you haven't done it already. Right. Yeah, exactly. All right. Getting another move down here. And we have not crossed the VWAP yet. So let me make this window a little bit bigger so you can see the VWAP better. We're getting the VIX giving us a little move here to the upside, meaning, what does it mean? VIX runs inverse to the market. VIX goes up, market comes down. Getting our MACD rolling over to the downside. Let's see if we can break this VWAP one more time. They're giving us teeny little candles right now. Back down under the 200. Do you see how it respected it here, came up over it here, and back down under it? So we're back down under the 200. I'm going to test the VWAP here in a second, unless we just bounce right here. Let's see what we get. And again, usually if we break the VWAP, I'm on it. I'll take that trade. But as you can see, every time we've broken the VWAP so far this morning, they've recovered it because of this range. So unfortunately, there's just no good trades, no good setups right now. And what do I say? 90% of trading is patience. It is about waiting for your setup. It's about waiting for your trade. It's all about patience. Warren Buffett, one of my favorite quotes that Warren Buffett said, he said, "The market is a tool for taking money out of the hands of the impatient and putting it into the hands of the patient." And he is right. That is one of my very favorite Warren Buffett quotes. And he's exactly right. If you're impatient, if you have to be in a trade, if you can't wait for your trade to play out, you're going to suffer. You're going to get hit in your account. It's all about being patient. I am okay sitting out this chop because this chop will blow up your account. You could blow up your account real easy on a day like today. Because here's what happens. You jump in, let's say you jump into the call, like, okay, it's bouncing off the VWAP. You jump in, oh no, it's coming down. All right, I'm going to jump into the put. Oh no, we're going up. All right, I'm going to get a call. Oh no, we're going down. This 1, 2, 3, 4, 5, 6, 7, 8 times they could have taken your money just like that. And it's fast, especially with options. It's fast. So this is the type of chop that I want to avoid. That's kryptonite to the scalper. Let's switch back over here to my futures chart. There we go. And again, what did we do? We didn't quite touch the VWAP. We just came down and bounced again. Chop, chop, chop. And you will get chopped up if you try to trade this. All right, so we're coming up to the end of the stream, but I want to talk a little bit about my trading plan going forward today. I've already traded a few times today. I'm sitting in a trade right now, which I wish I weren't, but it'll be fine. The trading plan for today is, at this moment, I am waiting for this range to break. I don't know which way it's going to break. My sense is to the downside, but I'm not going to trade that. I need to wait for that confirmation. So what does confirmation look like? Usually it looks like a break of the VWAP, but today, as you can see, that's not the case. So in this case today, confirmation is I want to see us break down through these lows if we're going lower. And I want to see us break up through these highs if we're going higher. But remember, what is the range so far? It's this low, it's this high. We saw that on our volumes. 688 on the put side right there, 690 on the call side right there. So until we break that, it's no trade for me. Once we get over the top or get down below the bottom, then the market will show its hand. Basically, it's playing poker with us right now. It's got its sunglasses on. I like to personify the market. It's got its sunglasses on. It's playing poker with us, and it's not showing its hand. It will. It's going to have to show its hand. So once it does, that's where we will know what direction we're going. Right now, it's saying, it's got its sunglasses on, right? So that's my trading plan for today. As we break to the upside, I'm open to taking calls. As we break to the downside, I'm open to taking puts. And that's kind of where I'm at on these trades for today. Again, the market will show its hand. It's going to take its glasses off here in a minute. We just don't know when. It can go sideways for as long as it wants. That's the market has the ability to do that. It can trade sideways for as long as it wants. And what happens when it trades sideways is, as you know, when we trade options have an expiration. I'm trading today's expiration. That means if I don't make money on my option by the end of the day, they take all my money. It expires worthless. I get nothing. So if I buy an option that expires at the end of the day, there's something called theta. That's a Greek. It's time value. So when I buy the option at the beginning of the day, it's going to cost $200, $150, $200, $300. By the end of the day, it's worth nothing. So all day long, that value moves down, regardless of what the market is doing. Unless the market is really going in your direction, that time decay is going to eat away at your option all day long. And when they do this sideways slog, this consolidation and this range bound trading, what they're really doing is just eating up your theta. Because guess what? We buy the option. There's someone on the other side selling that option. Do you know what they want? They want that option to go sideways so that we can't get our money out of it because they get to keep it. So if that option goes sideways or against us, they are the ones keeping it. So always remember there is someone on the other side of your trade, and they are benefiting from this sideways action. So that's just something to be aware of. That's why this sideways action is dangerous for scalpers. But again, trading plan for today, break of the top or a break of the bottom. That's what I'm looking for. I'm looking for the market to show its hand. Okay. And that is going to do it for me today. You guys have been absolutely great. I'm so happy that you're here with me. Thank you so much for jumping in and commenting and chatting with me. I love it. You guys have a great rest of your day. Safe trading. Be careful with any overnight trades as we have major data tomorrow. If you're holding anything overnight, be aware. We have major data tomorrow. All right, guys, it's been a pleasure. I'll see you again tomorrow at 9 a.m. Mountain, and we will dissect what happens with data. All right, guys, bye for now.